So what's up guys, in this video I'm going to share with you how I made all these entries, multiple entries, everything. I will share with you the strategy I'm using. In fact, this is the simplest strategy you will ever come across on YouTube here, and you can actually use this on a small account. You can use this to grow your small account, and you can see this is my target right here. You can see my where I'm going to be taking profits, more than 50 to 60% of the profit I'm going to be taking right there. Okay, so I'm currently on 6 entries right here, so I think I'll be closing about 4 of the entries at this point. You can see it's almost hitting my TP, my target, which is this line. But I'm going to leave the other ones and manage the rest with I'm going to use stop loss to manage the rest. So that's exactly what I'm going to be doing. So let me do this live. Okay, this is a small account already, so I'm going to close this. I'm going to close this. I'm going to close this also. Then I'm going to allow these two to run. I'll simply shift the stop loss to here. Okay, I'm going to shift also the second stop loss. Okay, I'm going to shift it here too. You can see I've locked in this profit right now, so I will allow the trade to push down. Okay, so you can see there is no more TP right here, so the trade can go as far as possible. Okay, so guys, in this strategy I'm going to be sharing with you how you can use just simple information, guys. This one, you must not know price action, you must not know patterns and all that in order to make money using this strategy. And this strategy will give you more than 70%. Okay, this is a strategy that I have been using and I decided to share it today. Then I'm also going to be answering a question, because I'm using this strategy to answer a question someone asked me. This is my private mentorship program. Someone actually asked me about psychological level, if you can use it on indices. Okay, and I'm going to be sharing with you my experience with it and how you can actually use it in indices. Okay, now this strategy is very simple. Okay, this is simple. Already you can see I'm currently on 2 trades and I'm actually losing money. I'm losing some money. Okay, so this is one of my accounts and the account is down. Okay, yeah, that's the only trade I'm taking right now, and I'm using kind of 0.3 because it's a small account, guys. It's a small account. You can see I'm just losing, just like it's not up to $1 plus. Okay, so but the thing is, look at what I'm targeting, what I'm looking at. Okay, or what I'm looking out for is going to be this one. Is kind of scalping. I'm going to be looking for 1:1 or 1:2. Most of my strategy is 1:2, but this one, depending on the entry, guys, okay, this one is going to be 1:1. So let me just share with you what I mean. So the stop loss is going to be here at this. You can see this black line. That's where the stop loss is going to be, and the tip is going to be at this one down here. Okay, that's going to be my TP. So I'm going to share with you the outcome of this trade, if it hits my stop loss or it hits my TP. But I'm very confident about this strategy, and I know having used this strategy for a very long time and back tested, is going to hit my TP. Okay, it's going to hit my TP. So but if it hits stop loss, it's part of the game, there's no issues. I'm not worried. Okay, so let's check how many pips we are risking and we are targeting. So here for the first one, this is about 26 pips. That's the risk right there for the first entry, and the TP is about 24. So this is not good. So what I'm going to do, the first entry is giving us not up to 1:1, so I cannot take any trade that is not up to 1:1, guys. Okay, so either I'm going to shift my TP a little bit, okay, for the first trade, okay, because I want to get at least 1:1. It's a scalping strategy, guys. So this is this is now more than 1:1. So I'm just trying to do this with you guys so that when you are going to be doing it at your own end, you know exactly what I did and why I am setting my stop loss at the particular place or zone. So one of the most important thing about trading is that you need to know your entry and your exit point. You need to know your the exact place you are entering. So giving you a strategy is not enough. You should know where you should set your stop loss and set your TP. So that's why it is very important that you join my Telegram group where I send free signals. Okay, in this Telegram group, I drop free signals. I'm not just dropping the signals, and I will also share with you how much you are risking in pips and the value in dollars. So this is just like a premium signal group that I'm doing or I'm giving out for free. The link will be in the description if you want to enjoy that. Click the link and join the Telegram group. Okay, it's free. Now let me share with you the strategy. It's very simple. Now I'm going to be using psychological level. Okay, if you want to read about psychological level, just go to your browser and type it and read more things about psychological level. I'm not here to teach you what psychological level it is or what. I'm basically going to be sharing with you how to use this. Okay, but it's in a simple term. Psychological level is just a particular level, a round number, okay, where people are going to be like big firm, people who have a lot of money, are going to be setting their TP, their stop loss, their entry, their many things are being done around psychological level. These are numbers that can be easily remembered. Okay, if you look right here at my level, right here you can see 7,300. Okay, so you, instead of you looking for 7,325, 7,326 or something like that, you just draw a line at 7,300, 7,250, 7,400, 7,500, something like that. That is exactly what I mean by psychological level. So you can go to your browser, read. I'm not good in teaching all this theoretical stuff, so what I'm going to be sharing with you is how to take advantage of these levels. Okay, so here I'm using, if you look here, I have my lines. Okay, we have like this one right here. This is just 7,300. Here is going to be 7,350. Here is going to be 7,250, 7,200. So you are going to be marking your own this way. This is VS10. Okay, just go to 1 hour time frame and start marking out this. Maybe depending on where you are looking at your chart, just make sure you are getting a round number like this one. Okay, the same thing. So when you have this, you mark in the line, you drop a horizontal line at that levels. Okay, that's round numbers. Now if you have your horizontal line like what I have here, you can see everything is here. Okay, then you simply go back to do a little bit of price action, which is just draw in a trend line. Okay, if you look at this current chart, okay, you can see that the price actually on 1 hour time frame, that's where I draw my trend lines, guys. So you can see that the price is a kind of pushing to the upside recently. Okay, creating those higher high, higher low, and you have another higher high, higher low. So you might be expecting that, oh, we're supposed to be pushing up again. All right, but the issue is that I have my trend line already right here, and this price move up to my psychological level, respected it, and reverses to the downside. Now the game, look at the strategy. The strategy is that you want to see the price respect a psychological level. Guys, pay close attention. This is the strategy now. So if this one is, we have psychological level right there, we have it right here, we have it right here. So you want to see the price maybe break this one, push up, and if the price push to this zone and could not break the psychological level and respect it, okay, that's the point you start paying attention. Now the next thing is, once the price respect this psychological level, you are not expected to sell here. You are not selling here, so that's not the strategy. You are not going to be selling at psychological level. What you have to do is that you have to wait. Once the price respect the psychological level, now you have first signal that the price is likely going to push to the downside. Now what you have to do is to look at the trend before the psychological level. You can see that the price is pushing to the upside, right? So once you see that this price is pushing to the upside before the psychological level, you simply draw in your trend line this way. And once you draw in your trend line this way, you wait for the price to break this trend line to the downside. Once the price break it with what the another thing you need to pay close attention is which kind of candle actually break that the trend line. Now if it's a momentum candlestick, powerful candle, bearish candle, that is exactly what you need. Once you see it, you are going to be selling at this zone. So this is the zone you are supposed to sell, not just at psychological level. So that's the point you are going to sell. So what happened here is that you don't want to make the mistake of just thinking, oh, the price have respected the psychological level, I should sell. Sometimes the price can push up, push down to this level, push up, break it, and keep going to the upside. Okay, so let me go to the chart and show you an example. Just like what we have here, the price push from here, created higher high, and respect the psychological level. The price couldn't break the psychological level, push the downside, okay, and break this trend line right here. And the candlestick that you know uh break out from that trend line is a momentum candlestick, a strong bearish candlestick right there. So this candle was the one that closes below the trend line. So once the candle closes, I am supposed to make entry after the closing. Okay, after the closing, that's the point you're supposed to be making entry. Once the price closes with a strong bearish candle, okay, below the below the trend line, that's the point you are going to be making entry. Okay, and your target is going to be the next psychological level to the downside. The next psychological level to the downside. So now if you look here, the breakout happened like in the middle of the market. That's why you are seeing it's a kind of 1:1. Okay, but if the breakout happened around here, you might even get maybe the trend line is somewhere here and you might get 1:2 or 1:3, but because of where the breakout happened, which is here, that's why you're having 1:1. Okay, risk reward. I always want to get 1:2, but sometimes you can have something like this. So let's just go and see what happened behind some of the trade I've taken using this particular strategy. So you can see from what we have here, we have all our psychological level in place. Then the price started creating higher highs. You can see here higher low. Remember that this price did not respect this. Push down, couldn't break the trend line, push up again. Then at this point the price pushed to this psychological level, retraced back, push again. So let's see what happened. You are waiting patiently until the price break this level. So once the price break the psychological level, you can see this particular candlestick right here. Look at the candlestick you are waiting for. This strong bearish engulfing candlestick right there. So once it closes, that's the point you're going to be making your entry. So you can see here, you will get a better risk reward, I guess. At the closing of here, your stop loss should be above the psychological level. Your TP should be at your psychological level right there. Okay, sometimes you are going to get more. So assuming you made that entry, you would have made some decent amount. So this is just like you making sure you enter trade, you close your trade in profit, and you move on, look for another entry. It's very simple, guys. That's why I'm using this live example. So I'm going to pause the video. Once it hits TP or hits stop loss, I'm coming back to share with you the outcome of this trade, guys.